Hey everyone, Spectre here, and I want to go over an amazing options flow trade that set up between yesterday and today. So let's hop right into it. What I want to do is show you the option flow, and then I'm going to show you the chart. And so let's see here. Should be able to see. Oh, that was not what I wanted to do. Let's go back. Let's see if I can go back here. Let's go back to here. Type in coin. All right. So this is with a ticker called coin. And so what I have set up here is historical um, data. And the reason I have set up historical is that I wanted the data from yesterday and today so you can see kind of what happened, right? And so here's what got me really excited. Okay, so this ticker, I toward the end of the day, there was some really interesting call flow, right? You can see, and it's this one right here. Somebody for this week, okay, it was betting $11, 1.2 plus another 500K, like $1.7 million on 295 calls. And they were paying roughly 11 bucks. Okay? So I took a starter here, like at the end of the day yesterday, and I was like, hey, you know what? If they're gonna put a couple $1 million on it, I could put a couple bucks on it, right? And I was gonna. My plan was to risk 50%. So let's take a look at what happened. And now, if we go look at the chart, okay, so this is the coin chart, okay, and on the left is the pricing, and on the right is the calls for those 295 calls. So you can see around here 11, 12 bucks. This was at the end of the day, and this is where they hit. There's a bit of volume. And the crazy thing is that so if you're in like say 11.50 or 12 bucks, right? And so I'm kind of thinking, hey, if there's an issue, I'm gonna stop out at $6. That was kind of like in my head. But at the open, because of the big gap down that we had, I knew it was going to be $6. But I also felt that hey, it's not the end of the world. There's a likelihood that there's going to be a bounce here. I mean, someone put $1 million on it, and I was going to bet on buy the dip um, pattern that was going to happen at the open, right? So I was kind of like, hey, if that says it, I'll just manage it and see how things play out. So check this out, right? So you come into the morning going, hey, these guys paid did $1 million, $2 million of buying over here at $11. This morning, it's like $6, $7, right? So it did this. So you can buy a little bit here, pushes up. If you want, you can get out break even if you held and you didn't add. And then it dips, and then later in the day, you can see this huge volume right here, right around the $7 area, that another big buy came in, right? I think it was like 1,000 contracts or something that was in here. So at this point, it's kind of like, hey, you know what? Is it worth like somebody who did $2 million of buying? Is it worth me maybe buying here like $8 or so and risking maybe to $4 or $5? Let's just say low a day, right? 580. So I'm just gonna say $6, right? I'm gonna buy here at $8. I'm gonna risk to $2 low a day and then see what happens, right? And because there's the option flow was amazing, right? So let's go take a look at the option flow again. And and this is why you should be using Blackboxstocks. Okay, if you don't have a good option flow scanner, I mean, this is the one I use. I love it. Um, and the There will be a link in the description and the video below to subscribe to Blackbox. I am an affiliate, so just as a full disclosure, but I use the tool, right? So and I'm just showing you this, right? So let's go back. And so if you look, you're right. There was yesterday they were buying further out. They were going out to June for 400s yesterday, and then today on the 11th There's somebody who did the 290s. I don't have the time on this. Have to go back to, let's just go back to regular flow, and we can see the time that, somebody did this put here, that maybe it's a hedge. Um, but I wasn't trusting that one so much. I wasn't, because I knew about all that other buy, and I knew, price action, and the way things were kind of moving and setting up. It looked more bullish than bearish, and so there was more. Somebody else bought $7, 165K. Another 295 came in at $14. Another 500K buy. So now and now somebody's buying further out, another week out. 350 calls for $3, and later in the day, right? And then someone else here put in a 386K bet for the downside. And then there's another 300 going out to August, right? And they're putting $40 on that, 400K betting on upside for coin. So you can kind of take a look and see how people are kind of placing their bets with the option flow. And what I look for is, I look for price action. Then I look for, hey, am I the only one thinking this, or is there a big money kind of going along the same idea? And or you can flip it the other way and go, hey, what is big money doing? And then do you agree with their idea? So there's a couple different ways to use option flow, but this is fantastic, right? Like being able to see that, hey, there's $2, $3, $4 million in call flow in a weekly or next week's worth of expiration. That's bullish. I mean, that's some big money that someone's putting out there for a bet. So that was pretty, I'm interested, and then also it's earnings with this week, right? So there's a couple different ways to play this. Now, let's go back, look at the chart, and see um, what a person could have done, right? So, say you bought here at 7. I mean, this thing ripped, right? Or say even you bought yesterday at 12 or $11 there, right? And you averaged, and you now have a $10 average, and you're maybe risking $8 or $2 here, and then it rips up here into 16, $17. You can take some off, right? Maybe take 3/4 off or 4/5 or something. Take it off, lock it in, and now your trade's free. You can write it for earnings, and if the earnings are great, boom. But you don't have much risk because it's paid for from the gains from here. So if you had 5 contracts here, right? Let's just say that you jumped in knowing about the $2 million of buying yesterday, that you didn't buy into that, rather you bought into the concept of it's BTFD in the morning, and you get this double bottom. You see this big bar right here. You see it starting to grind. You come in $8. I'm going to risk 2, and you go, hey, I'm going to grab 5 contracts, right? And if I'm wrong, I stop out at 6. I'm going to lose $1,000, right? If you held this, and you held it all the way up to 8, maybe you took it off at 16, right? You're holding for the day and see what's going on. It goes from 8 to 16. It's double, right? You can take, like, say 4 off, right? And that 4 times 8, what is that? 5 and 8 is 4,000. So $3,200 or so. So you're locking in $3,200, and you have 800 that's unrealized with that last contract, right? I mean, that's great, right? And you paid for the last contract, you paid 800, so you have 800 unrealized. You have this 800 right here. You have 3,200 in your pocket, and so even if this goes to zero after earnings, what are you gonna have, right? You're gonna have 3,200 minus $800, right, for the loss if it gets wiped out, right? But you have some massive upside, right? There was a bunch of shorts that kind of came in this week with all this dumping, and you have an earnings catalyst. So I don't normally like to trade and hold for earnings, but I'm okay doing it when it's paid for, right? Like I've got some profit, and I'm letting it, that trade pay for my bet, right? But if it's just an open bet, I don't usually do those, right? I'm not willing to risk 100% of capital just on a maybe on an earnings play. But if it's paid for from another trade, hey, I'm cool with that. And so, because I just think of it as part of a bigger picture trade, and so that's just something I wanted to share with you guys. Like I wanted you guys to be aware of how you can use option flow. Um, Something goes against you, you weren't prepared for. It wasn't like, it's kind of whacked. But then you kind of watch the price action, right? And if it's BTFD and you can do this, or you get out and size down, then it comes back and holds. You can use that knowledge of the $2 million of buying over here to say, hey, you know what? I'm getting to buy it at a discount from what these guys paid. Almost a fit. I mean, they paid 11, so let's just say $12. And you're getting in at 8. You're getting in at their same idea at almost like a 50% discount. Is that right? Yeah, right. They paid not 50%, I'm sorry, like a 30% discount. $4. Yeah. So, you're getting in 30% off from what they paid. And so and you have a tight risk. It's a nice risk reward. And that's what I'm all about, right? For everything I do for my trades is I'm always looking for outsized rewards for the risk I take on. And this was an amazing one. So, anyways, just I hope this video is helpful. Remember to like uh, the video, subscribe to Man versus Theta, and if you're not already a member of Blackboxstocks, be sure to consider um, subscribing to the service. It's a fantastic tool. So thanks again for watching, everyone, and I'll see you guys next time.